How's it going, everybody? It's Stas here. So we have to have a real talk on this Saturday morning, beautiful Saturday morning at that, here in New Jersey. And I'd love to know where you guys are watching this video from. Drop me a comment down below. It might not be Saturday morning where you're watching this from. Maybe you're in Europe, maybe you're in Australia. Drop me a comment. Let me know where you're from. But I wanted to hop on the YouTube channel this morning and do an off-the-cuff video, talk a little bit about what's been going on in my mind, a little bit about the stock market, the Fed, portfolio construction, and I want you guys to be very, very prepared for what could happen here in the future. And no, I'm not a fear monger. I'm not here giving you guys negative crap every single day. And this is not negative. I'm just speaking from the soul, if you will, whatever you want to call it, guys. But I want you all to be prepared, because at the end of the day, you guys, the YouTube channel, subscribers, we're like family here. I mean, I'm making videos every day. I truly care about you guys. I hope you all get that at this point. You know, I'm not just here putting on a BS show. So let's talk a little bit. S&P 500 SPY, which you know, is an ETF that tracks the S&P 500. This has doubled up over the past year and a half, right? Ever since the middle of March, we've gone from 218 on SPY to $454, which we just hit, I believe, this past week, right? Let me double check that. Yeah, on Friday, we literally hit another all-time high. So this has gone up over 100% over the past year. And many of you guys, sure, you probably bought SPY, made a lot of money. You bought a lot of individual stocks, made a lot of money. I'm one of those people, right? I didn't buy at the bottom. I'm not going to lie to you and say, oh, I bought at the bottom. I didn't buy a lot of stocks at the bottom either. Really, and I didn't buy any of the stocks at the bottom. But we've made a lot of money, a lot of us collectively, right? And the Federal Reserve is the reason, one of the main reasons why the stock market has been going up like crazy. I mean, that's no secret at this point. We all know that. Well, most of us know that. With 0% interest rates, all of the quantitative easing, the bond purchases, $120 billion per month, which we might be seeing, well, we will be seeing tapering soon. This has been what has been holding up the markets, right? And the truth is, you have to ask yourself, is this going to last forever? I don't think it is. And it doesn't take a rocket scientist to say that, right? The Fed, at some point, they are going to taper. I mean, for Pete's sake, guys, Powell's been saying this. They will taper. We don't know what the taper is going to look like. They're probably going to go from 120 a month to 110 a month to 100 a month and slowly wean that back, right? And then they're going to start increasing the interest rates. And he made it pretty clear, right? He's going to taper first. The Fed's going to taper first. And then they're looking to raise those interest rates. And when this does ultimately happen, what is going to happen, right? Well, what does this even mean anyway? At the end of the day, guys, people are flooding money into the markets because 0% interest rates gives you no incentive to really save money. I mean, you know, your savings accounts are 0%. You know, bonds are pretty much useless at this point. So you have no other choice but to put money in the stock market, right? That's another big reason why we're seeing a lot of people flooding in. They're throwing money at dividend stocks that pay 2-3% because they don't really, you know, make money at all in the savings accounts. They're throwing all this money at high interest or high growth stocks rather that aren't making money necessarily today in terms of earnings, but their earnings are, you know, scaled out in the future. And what happens when these interest rates rise, guys, is more people will have incentive to save money, right? To kind of scale back on their investments. And then what happens there is, you know what happens? The crazy thing is, a lot of these speculative high growth stocks, which again, they're not making money now, their earnings are not in the present, they're really scaled out in the future. A lot of these stocks will take a hit because with higher interest rates today, that messes with the future returns of the stocks, right? If you've ever done what's it called? The discount rate. That's what it's called, right? If you've ever ran, discounted cash flow models, interest rates play a role in that. So what you're going to notice is in the future here, I'm not sure when it's going to happen, but whenever we see interest rates rise, the tapering occur, and let's say the Fed sticks to that, because there's also a chance that, listen guys, I'm not even kidding, you can't believe the Fed. That's the truth. There's also a chance at this point that we see them taper. We see them increase rates a little bit, let's say 25 basis points, 50 basis points, then the market collapse. We see a crisis occur, a financial crisis start to occur. The Fed might see this happening, and they're like, oh, no. We're going to go back to zero. We're going to ramp up QE again, and we're going to just keep on rolling, kicking the can down the road. That's also a very real possibility. So in that case, we might be at zero interest rate for a long time. Who the heck knows what's going to happen? But let's say, right, the Fed increases rates, they stick to it, even though the markets might crash, it might cause a crisis. If this were to happen, guys, what's going to happen? A lot of your stocks are going to get slammed, some more than others. And the ones that will get slammed more than others are not the blue chip stocks. They're not the companies that make a lot of money today. It's going to be those companies that are more speculative. Their earnings are more pushed out in the future. And if you're heavily concentrated in these types of companies, you're probably going to get slaughtered, right? And I'm not trying to be an a-hole. I can't curse here on YouTube, guys. I'm not trying to be an a-hole. I'm not trying to scare you guys, but I'm just being real. I like keeping it real here. If you're too heavy in the speculative stocks, right, you're going to get slaughtered. You're going to be chopped liver at the end of the day. So I'm not here telling you guys what to do. As always, I'm not a financial advisor. I'm not telling you all what to buy. Quite frankly, like I said, I'm not a financial advisor. I can't tell you what to buy, but I want you to be prepared for that. If you're one of those people that you're in a lot of these high growth stocks, which, okay, some of the high growth stocks, they do make money today. So let's say the more speculative stocks. That's the way I want to put it here. If you're in more speculative stocks, you don't own any blue chip stocks, you don't own any ETFs that track the markets, you're going to be in some pretty tough shape. I mean, we've seen stocks, mind you, the stock market's at all-time highs, and a lot of these speculative stocks are down 80%, 70, 60%. Could you imagine what's going to happen when the markets correct 20%? Let's say SPY were to correct more towards these moving averages on the 3-year chart. Do you know what's going to happen to these stocks, guys? They're going to get obliterated. I mean, they might be down 90, 95% from all-time highs. And the last thing I want my audience and me, but I mean, I already know this stuff. I mean, I feel like I've positioned myself decently here. But the last thing I want my audience to do, and again, you could do whatever you want. I mean, I'm not here to tell you what to do, but the last thing I want to see is you guys get wiped out. I mean, that's the last thing I want to do. And don't even get me started on margin. If you guys are buying these speculative stocks on margin too, that's not going to be good. It's not going to be good either, especially if you're even buying call options. You're just ridiculously reckless. I don't know. It's going to be rough for you. And I'm not here preaching, and maybe I am a little bit, but I don't want to come off as that. I just want you all to understand there's a big difference between speculating and investing. And sure, I speculate. I mean, I have some positions that are a bit crazy, but even some of these cryptos, crypto, in my opinion, is not, it's good. I think it's here to stay. I mean, it has a place in everyone's portfolio, but some people are just going crazy with all of these coins, which at the end of the day, a lot of them are just pure speculation, right? There's a big difference between investing and speculating. When you're investing in something, the business itself makes money. It gives dividends. There's a future outlook for more money to be made in the business. Revenue's growing. A lot of these businesses, there's nothing like that. A lot of these coins, the coins don't even make money, guys, these cryptos. And I don't want to get hate for the crypto comments. I mean, I own Bitcoin, but come on, let's be honest. These coins, they could be worth 100,000, 5,000, 300,000, and there's no underlying fundamentals. If that, well, there's fundamentals, but there's no cash flow being produced. When you're looking at a business, right, you're looking at the cash flow being produced. Is this business making money? Is this business looking to grow the revenue streams, the cash flow, free cash flow, profits in the future? And with crypto, I'm not knocking crypto. I own it, but a lot of people are too heavy into this, thinking they're investing, but they're speculating at the end of the day. Come on, I'm being real. Screw it. If you guys want to dislike the video, go ahead. Whatever. But those are some thoughts, guys. There's a big difference between investing and speculating, and when constructing a portfolio, in my opinion, the way I personally do it is I like owning the S&P 500 as a big chunk of my portfolio, whether it's from SPY or VOO. I personally like VOO more because they have a smaller expense ratio. So for me, the less money I'm giving to the management team, whatever the heck you want to call it, in terms of the expense ratio, the better. I don't want to give them my money. I want to keep my money in my pocket, so I own VOO over SPY, even though essentially they're the same thing. They both track the I'm stuttering here. They both track the S&P 500, right? And I like building my portfolio around VOO and then picking stocks that I truly believe in, that are growing, that have a future, and that, quite frankly, are not extremely expensive. That's why I've been buying Alibaba. And when it comes to individual stocks that I'm buying and holding long term, this doesn't really deal with swing trading, right? I'm still swing trading. That's different. But when it comes to longer term holds, I'm not really doing anything crazy right now. I'm buying Alibaba. I'm buying some, XLE, which is an oil ETF. I've been buying a little bit of GDX, a gold ETF, to get some exposure there. I've been buying VOO, the S&P 500. I've been buying VEA, which is an international developed markets ETF. This is what I've been buying, and that's what I feel comfortable with doing right now. And I own a lot of other stocks. I'm not some fearmonger that doesn't own anything. I own Amazon, I own PayPal, I own MasterCard, all at much lower prices than where they are right now. And next time we see a correction, these are the businesses that I want to be buying more of. PayPal, Amazon, I own Apple, of course. I own so many stocks, guys, that I truly believe in and that I believe are not speculations. That's what it comes down to. So that's pretty much it, guys. How long are we in here? Wow, 13 minutes in. I should probably shut up and end this video now. So that's it. Hope you guys enjoyed it. If you did, smash the like button, drop me a comment, let me know your thoughts as always, and let me know where you're watching this from. I haven't done that in a while. I haven't asked you guys that. Let me know in the comments where you're watching this video from, and make sure to check out my Patreon. If you guys want all my real-time buys, sells, call-outs, a morning update video, private Discord access, and if you want just more access to me throughout the day, one-on-one, that's on Patreon, link down below, or you can go to StasserFest.com/Patreon, get your $50 as well from M1 Finance, your 2 stocks from Webull. All of those are linked down below, and that's it. I'll catch you guys in the next video. Thanks again for watching. Let me know your thoughts down below. I'll see you guys later on. Have a great long weekend. Peace out.